what has been a sort of ongoing concern for the investment community is that the geopolitics in terms of trade war, with tariffs that are in the headlines every day, nuclear negotiations with North Korea, tension with our Western allies in Europe, whether it's Turkey, potentially currencies or Italian elections. So geopolitics is clearly something that we are paying attention to. And bringing it back home domestically, Fed has been aggressively hiking interest rates, trying to stay ahead of inflation. There has been increasing pressure on wages as unemployment rate has come down to mid 3%, which is close to historical low. So economy is doing well, unemployment is very low. Wages continue to move up a little bit, so things are doing pretty well. If you move to Europe geographically, Europe is continued to sort of grow at low single digits, but continue to grow. And China, even though it's slow, and it still continues to do reasonably well. So overall, it's been a pretty robust environment, not without volatility, but pretty robust nevertheless. A couple of sectors have contributed to positive performance for the quarter so far. It's healthcare services and financial services. On a positive side, and the areas that have hurt, relatively speaking, have been energy and staples. In terms of healthcare, it's mostly services names like CVS that bounced back very strongly since AT&T Time Warner deal was approved. And it's also MCO companies that we've owned for a number of years like UNH and Anthem. Those have done well for us. Within financial services, we had American Express that posted strong numbers, Bank of New York that bounced back strongly also after first quarter results that came in better than expected. And even Wells Fargo that has been sort of languishing because of the regulatory kind of overhang that they're dealing with has done pretty well for us. So it's been a pretty narrow market, and it's become even narrower as the time goes by. And led by just a handful of technology companies. And I'm not making a prediction that those companies are, or judgment whether those companies are fairly valued or overvalued, but generally speaking, those periods are not sustainable in the long term. And we think that as the market broadens and there is some kind of reversion to the mean where out of favor stocks or sectors would tend to do well, we think that large cap value strategy that we represent, which is high quality businesses at reasonable prices, should do pretty well going forward.